Welcome to this update on the Planning for Profit software. We are thrilled to announce the new dashboard that just became active today. If you logged into your software today, you saw all this stuff pop in for your company. I want to take a moment and just walk through this and give you a little bit of background about what each of the dials or tables on this dashboard are now showing you. Our goal was to give you a quick glance at where your company is and how you're doing, and maybe where are some areas that you can focus on as you start moving forward to make improvements. So let's start out here in the upper left-hand corner. First, you'll notice each of your departments that you have set up will be listed right here. We're showing you very quickly the department, your break-even rate based on the information that you have entered into the software at this point in time, your current rate, what are you charging today, and what is the net profit that that labor rate is generating in your company. Now, from there, depending on what you select or which department you select here, all the rest of the dials will start to update and change for that particular department. By default, it's always going to show you the first department. So, for me, that's my service department, and so we can start looking at some of the other dials that we have here. The first one is the over or under for billable hours. If you've been through any of our workshops, you've heard us say it is all about the billable hours. The number of hours that you are billing out throughout the course of the year compared to what you thought you were going to be billing out when you actually created your model. Again, as you use the software, you're actually creating a budget in the background for the number of hours that you think you're going to bill out each year. Well, that basically is all wrapped up into this one dial right here. Your goal is to be at or above 0. As long as you're at or above 0 here, it means that you're billing out the number of hours that you thought you were going to at this point in the year, right? So very clearly, if you're in the green, it's a good thing. If you're in the red, you need to focus on that area. Now, the data for this chart is coming from in your menu. On the far bottom item is the tracking reports. When I go into the tracking reports, there's only one there. It's the budget versus actual labor hours report. And on this particular report, again, for your individual departments, again, as I said, you've created a budget right here for the number of hours that you thought you were going to build out. Now, you didn't do it actively. That was actually done for you in the background as you were entering in your employees. When you entered in each one of your direct labor employees, it actually looked at, okay, how many hours are they going to be billing out in each given month? Totals all that up for all of your employees in each individual department and creates your budget for you. Now, this tool today gives you then the ability to go in and say, how many hours did I actually bill out this month? And so if I can see here, I put in my actual number of billed hours that I put in throughout the course of the year. As I scroll down, we're into September at this point, so I've got part of the month of September in here. What it's doing is it's always looking at, if I keep moving across, we got each month, and then we have cumulative totals for the year. We're currently, for the year, 20.11 hours behind where I thought I was going to be at this point in the year. That's the data right there that's being reflected on the actual chart itself. You'll notice here, if I come in and say, in the month of September, we actually finished up the year at 500 hours. I'll just put in a number there. All right, I can see on this chart that puts us 429 hours ahead of where we thought we were going to be. Now, when I go back to the dashboard itself, you'll notice that my dial has immediately reflected that particular update. So at a glance, I can see where I'm at for for this particular department. Where am I at throughout the course of the year? The next dial here is for the current job tracking hours. So under jobs, if you're using the job tracking hours report, where you can actually get in and start to track where am I at on each individual job, that will reflect right here on this chart. If you don't have any data entered in there, that will simply show at 0 for you. Now again, if you do have data in there, right, so for example, if I were to switch this over to my new construction department, you'll see that in new construction, I do indeed have jobs in there, and right now I'm 323 hours ahead of where I thought I was going to be on those jobs. In other words, I'm getting them done in less than the number of hours that we had in our proposal. And again, that's a good thing because, quite frankly, those 323 hours are all profit. Or, on the other hand, they're available to really offset hours of those jobs where we don't do so well. So that is the cumulative total for the current year for this department on all jobs that we have entered. Just helps you track where you're at on your model. The next dial is our target gross profit percentage. And the target gross profit is the gross profit that you need to hit in order to cover all of your fixed expenses, variable expenses, and your desired net profit. Many of you actually use a divisor, a gross profit divisor, in order to price out your jobs. And again, that's well and good as long as that divisor that you're using is accurate. Is it high enough to actually cover your overhead and your desired net profit from a cash flow perspective? This number will give you what that gross profit would need to be, and it likely is different than what you're using today. The next dial in there is the overhead gross profit. What portion of your gross profit is just overhead? So this number is basically the just fixed overhead, just variable overhead combined, those two items. The difference between these two dials is basically the net profit that you would be seeing on the chart right up here above. Right? It's that net profit, that's the difference. Next two graphs that we've got in here. First one is the materials as a percentage of sales. What percentage of your overall sales for this department is made up of by the cost of your materials? Now, as a general rule, for most trades, the install side of the businesses would be somewhere between 34, 35, 36% of your gross sales is the cost of materials. For a lot of contractors, the vast majority of contractors, quite frankly, it's much higher than that. They'll be in the range of 45, 50%. If that's the case, your gross profit and your pricing is too low. And one of two things is happening. Either your pricing is not in line, or you've got a lot of lost, a lot of wasted time, a lot of wasted materials that you're using on jobs. You're not accounting for all the materials that you're using, things like that. And so really this dial is giving you this information for this given department is where we're at. You can see I'm currently sitting here at 27.1%. I'm actually a little bit low in this case. In most cases, that number would be higher than that. Next dial over is our revenue per employee. Now, this is revenue per full-time equivalent employee. As a general rule, we start looking at how much revenue are we bringing in for each and every employee in the company. If this number is too low, you're not using your team efficiently enough. If the number is too high, you're starting to work the team to the point where things are probably starting to fall through the cracks. Jobs, the details on jobs are getting missed, and things are going to start to go wrong. You're probably at a point where you need to start looking at adding more people to the team just in order to maintain the efficiencies and getting things done, providing the levels of customer service that you need to have. Now, again, for most companies, that's going to be somewhere around $170,000 per year per employee. And again, it is full-time equivalent employees. So if you've got part-time employees that we have in there that they're working less than 40 hours per week, we're just simply backing that into in how many full-time equivalent employees does that mean. So two individuals working 20 hours a week is the same as one person working 40 hours a week. So we backed it into those numbers for you already. So in this case, I've got a little bit of room left here, but pretty soon, a little bit, once another couple $1,000 per employee, and I'm going to have to start looking at probably adding more people. Right? And there's a chance that in order to get the couple extra $1,000, I might need to add a few more people. But there's also chances that, like we saw here, that we can increase efficiencies in our model to help us. So just gives you the pointers. You can do the digging based off of that. Next item that we've got in our chart is our actual monthly cash flow for this particular department. So again, this is the same chart that you received under reports and under the monthly cash flow. It's down at the very bottom of that particular graph. Again, the way this particular chart works is the blue bar is each month as on its own, as a standalone, and the green bar is the cumulative total for the year. So this is a department. You can see I'm actually slightly below zero, so we're actually consistently losing a little bit of money each and every year, and then we hit December and give everybody off for vacation, and so we lose a little bit more money there as well. Again, with any of these graphs, as I change the department, I can see that it will update the graphs, give me new data, and start to, again, replot everything from that point. So a lot of information. Hopefully you'll be seeing a couple more additions to this as we come forward, go a little bit forward. This is the initial look at the dashboard itself. If you have any questions, don't hesitate to give us a call.